Hey everybody, thank you so much for checking the channel out today. My name is Agabus. This is your financial education channel. What a tremendous year we had in 2023. Let's take a quick review and see what happened and maybe get a few ideas for what might take place here for next year. Today we're starting off with Forbes Advisor 2023 Stock Market Year in Review. In 22, the S&P 500 bounced back from its worst year in over a decade, and it is on track to finish 23 up as well, with a gain of about 21% through November 30th. I think it's closer to 25% as we wrap up the year here. The ride for investors hasn't always been a smooth one, though. Most of the market's gains came early in 23. Despite concerns over inflation and rising interest rates, an unexpected regional banking crisis, and rising geopolitical tensions around the world, the U.S. economy remains resilient and corporate profits are on the rise. Tech stocks in particular regained their swagger in 23, with the so-called Magnificent Seven mega-cap tech stocks leading the charge. Tech, communications services, and consumer discretionary stocks have notched big rebounds in 23, and so have growth stocks in general. The tech-heavy NASDAQ composite gained around 37% in 23, and blue-chip Dow Jones is up about 11%, just recently hitting all-time highs. The 23 market strength has been buoyed by the Magnificent Seven mega-cap tech stocks, which all got crushed last year. Those would be Apple, Amazon, Alphabet, Nvidia, Meta Platforms, Microsoft, and Tesla. All 7 stocks have more than doubled in the S&P 500's gain so far for the year. This year we had some exciting banking crisis taking place in the spring. The stock market stability and strong performance heading into 24 are particularly impressive given how a regional banking crisis rattled the markets in spring of 23. In a span of just a couple of weeks, mounting losses on cryptocurrency investments, sharp downturns in the value of bond portfolios and commercial real estate, not to mention aggressive runs on bank deposits, triggered the collapse of Silvergate Bank, Silicon Valley Bank, Signature Bank, and First Republic Bank, one of the largest banking failures in U.S. history on an asset or deposit level. U.S. regional bank stocks plummeted across the board as investors lost confidence in the banking industry and feared the contagion could spread to other banks as well. And that index and those banks have not yet recovered for the year so far. A broader and deeper banking crisis was likely averted as the Federal Reserve stepped in. The central bank provided emergency loans to distressed banks, and it assured customers of the failed banks that they would be fully recover their deposits even if they exceeded the $250,000 insurance guarantee by the FDIC insurance. Some would argue that it might not be such a good idea to make that precedent, because then if banks start or continue to collapse in the future, they'll look back and say, well, what about me and what about those other banks? Curious where that might come into play down the road. Some of the best and worst stocks of 2023, as we talked about, tech stocks in particular crushed it in 23. Some of those highlights would be Nvidia, a high-end semiconductor stock, has gained 220% year-to-date. This was written a few weeks ago. By far the best performance of any stock in the S&P 500. Nvidia's data center business has boomed as companies rush to upgrade their infrastructure to handle the intense AI workloads. Meta Platforms, the parent company of Facebook and Instagram, rallied 172% in 23 as the online advertising market recovered from the 22 downturn. Also, Meta's proven that it can still grow revenue and profits at an impressive clip with investing heavily in AI tech and the metaverse. Top investment themes for 2023 as we look back. The biggest thing, it looks and sounds as if AI was all over the place. ChatGPT and other generative AI products and services took the world by storm this year, and investors flooded into stocks with exposure to the AI theme. It seems inevitable that AI will play an increasingly important role in the future of the economy, and investors appear to recognize the market is still in the early innings of a long-term AI tech boom. Switching over here to Charles Schwab, business leaders increasingly talk to shareholders about AI. You can see here, this is how many times artificial intelligence was mentioned on these earnings calls. Significant uptick since ChatGPT rolled out in the end of summer, fall of 22, and you can see it's been all the rage so far for this year. The crypto renter finally thawed in 23, setting Bitcoin prices soaring to 128% year to date, again as of a couple weeks ago, as investors anticipate the potential launch of a first spot Bitcoin ETF in early 24. Mark your calendars, it could be the first or second week of January. In addition, cryptocurrencies themselves, the crypto market rally spilled over to crypto-related stocks such as MicroStrategy and the mining company Cipher Mining Tech. Some of these companies that hold Bitcoin on their balance sheet crushed it this year, not only because the value of the asset Bitcoin increased, but also their businesses are doing phenomenal as well. Take a look at some of those companies who are holding Bitcoin on their balance sheet. They were up 100+% this year. Inflation and interest rates. Looking back, inflation interest rates in 23, the Federal Reserve is forced to begin aggressively raising rates starting in March of 22 in a campaign to bring down the surging historic inflation. In 23, investors saw signs that the Fed's monetary policy tightening was paying off, dampening the rise of inflation without, quote, at least so far, triggering a recession. Year over year, CPI has peaked at 9% in June of 22, but has already dropped to 6.4% by January and has continued its downward trend through 2023. Just recently, the Federal Reserve had said that they are going to implement rate cuts for 24, but they did not yet say or claim victory over inflation yet. Make sure you're looking and reading between the lines on what some of our central planners are saying. Looking ahead, the bond market is pricing in nearly an 80% chance that the FOMC will pivot from rate hikes to rate cuts by as early as May of 24. Bill Adams, chief economist for Comerica Bank, says consumers have held up relatively well in 23 despite a difficult environment, and says, quote, most people who want jobs have them, and Americans are confident about their job prospects in 24. I would push back a little bit, but that's just me. High prices are still a source of frustration, but income growth has outpaced inflation since May, bolstering the spending power. And lastly, as we look to 2024 stock market outlook, heading into 24, economists and analysts are relatively bullish on the outlook for the economy and the stock market. Elevated interest rates will likely weigh on economic growth, but the Federal Reserve is projecting U.S. GDP growth will remain positive in the coming year. Analysts are forecasting a good year, 11% earnings growth for the S&P 500. The average analyst's S&P 500 price target of 5,029 suggests the index will gain another 10%, bringing it again to all-time highs here in the next 12 months. As we look forward to 2024, there can be some risks in the system. Let's take a quick look at Charles Schwab and see what they have to say. Some of the biggest things they are projecting here are lingering inflation, rate hikes offsetting rate cuts, China rebounding, artificial intelligence, and election surprises. Inflation has come in waves before in the US, UK, Canada, and Australia. As you can see here on the charts, there were different phases or waves back in the 70s and the 80s, and the current path of inflation in orange from 2013 to present has echoed the period's path so far. There is some similarities here. We'll see if inflation comes roaring back this year. Rate hikes. There are signs of a new era for the Bank of Japan, who finally considered rate hikes after 17 years. Any rate hikes in Japan could offset some of the excitement over rate cuts by other major central banks in 24. The Bank of Japan will hold its next monetary policy on December 19th today. While we expect the BOJ to maintain the status quo at this week's meeting, there's potential for a signal that rate hikes are coming in early 24. China is rebounding. After strong growth in the first quarter of 23, reopening momentum in China's economy stalled. Sentiment on China's growth outlook flipped from a year ago. Last year at this time, economists were upwardly revising their 23 forecasts from 4.8% to to a high of 5.7%. We shall see how China's rebounding and economy starts to come back, hopefully, in these next few years. Next, as I mentioned before, AI is now even more in the mainstream. One development that has the potential to transform growth prospects might be AI-related boom in productivity. The tightest labor market in generations, with unemployment rates in the US, Canada, Germany, and the UK recently falling to lows not seen in 50 years. AI could help manage wage costs by filling the gaps where workers are unavailable and boosting output per worker. And lastly, election surprises. Risk associated with the U.S. elections in particular is during the transition between outgoing and incoming presidents, when foreign adversaries often have chosen to take actions in conflict with U.S. interests to seemingly test the incoming administration. A few examples here are from the 1980s election. The Iran hostage crisis came to peak and end in 81. In 1988 elections, George H.W. Bush, the senior, had to contend with some terrorist bombing of commercial airliners. And 92 elections, the transition period from the incoming Clinton administration, included 28,000 troops being sent to Somalia in 92. 2024 should be an exciting year. The last thing that Schwab says is be prepared. Let me know your thoughts in the comment section below. How did 23 go for you? Did your expectations come true? What are your crystal ball predictions for 24? Would love to hear it. Thank you so much as always for listening to the end. As always, stay inquisitive, stay informed, and stay subscribed for more. We'll see you tomorrow.